I can't stop thinking about that interview with Stanley Druckenmiller, the one I talked about a couple of days ago, the one that's been doing the rounds on the internet. If you don't know Druckenmiller, he's kind of a legend in US investing. He worked with George Soros for many years, 12 of them as lead portfolio manager, I think, of the Quantum Fund. And he spearheaded the infamous Black Wednesday raid on the pound in 1992 that forced the UK out of the European exchange rate mechanism and caused all that upheaval. And his own fund's performance over many decades, year in, year out, is almost without equal. And the thing that's really got me is when he talked about sizing. That's why I've called today's chat Size Doesn't Matter. Now, other people might call sizing how much to speculate or invest, others how much to risk, others how much of your portfolio to allocate. But he says this is one of the key things that he learned from Soros. Goodness, this enormous thistle just there, look at that. Can't see it. Sizing is 70%, 80% of the equation, he says. Part of the equation is seeing the investment, part of the equation is seeing himself in a good trading rhythm. It's not whether you're right or wrong, it's how much you make when you're right and how much you lose when you are wrong. And he talked about streaks. He believes in streaks, like in baseball. Sometimes you're seeing the ball well, sometimes you're not. And one of his number one jobs is to know when he's hot and when he's not. And when he's hot, he needs to turn the dial up. And when he's cold, the last thing you should do is make big bets to get even. You need to turn yourself down. And the reason this has struck home with me, and perhaps might with you as well, is that I am not hot at the moment. I've had streaks when I've been great. Every stock I cover, every call I make, every buy or sell, it's red hot, bang on the knuckle. And I could go through old YouTube videos, old articles, and pick winners that eclipse any other commentator. Perhaps you followed me into some of these trades and made out like bandits as a result. But I've also had streaks when I've been awful. And I could go through old articles again and old videos and find you plenty of those too. Articles that, when looked back on now, just are awful, make you look like a laughing stock. Perhaps you followed me into those trades and you made out like a bandit who just got nicked. Looking back, I think my hot streak, I first thought my hot streak came to an end in the spring. In early March, I was bullish on metals. I bought into that whole decade of underinvestment narrative. I still do. But I failed to fully heed the Ukraine invasion pop and drop factor, followed by the impact of those China lockdowns. Never mind the broader market weakness. But now, I realise my mistakes go back further. Back to 2021. Should have read that second high in Bitcoin. Failure to see the tech bear market for what it was sufficiently early to have gone on the defensive. One part of my portfolio was doing well, all my natural resource stocks, so perhaps it concealed the other part. Then, of course, since the spring, decline of everything, I've taken some big hits, and I imagine you have too, and I've been too slow to react. And that's another thing Druckenmiller talks about, by the way. Act first, research later. Markets move quickly, ideas spread fast, especially good ones, so it pays to get positioned early, and you can always exit if your research changes the story. As well as a failure to recognise what was what, or only half recognising it, I've been, and being probably slow to move, my risk management was poor. So Druckenmiller's how much you lose when you're wrong. My answer recently, too much. Should know better. I'm more than a bit cross with myself, I must say. Nevertheless, I've been on a bit of a sort of tidying up exercise the last couple of weeks, re-evaluating positions and so on. Been working on my fitness as well, quite hard. I believe that helps you make better decisions if you're fit. And rightly or wrongly, I sold down some of my oil positions last week. I've got this feeling that oil's going to be the next shoe to drop in these ongoing liquidations. I don't think oil's going back to $50 or anything, but lower. So I sold down a couple of positions elsewhere that had got a bit tired, this stale long thing, so as to have a bit more cash in case this bear market has another leg down. And I spent quite a lot of time comparing the movements of various asset classes from 2005 to 2009 to the movement today, because I had this recollection that stocks peaked, then a few months of metals peaked, and then oil peaked, and then a few months after that everything crashed. And I just wanted to check that sequence, because I think the sequence has been pretty similar this year, so I started to get worried with another crash on the cards. I tend not to bet on crashes or even predict them, because they're so rare. We've had like 2 this century and maybe 3 or 4 in the last century. So crashes tend to be outlier events, and predicting them might get you extra hits and clicks, but more often than not you're wrong. But in any case, my revaluation has now persuaded me that whether we crash or not in the autumn, I think we're bouncing now. And, well, Friday's last couple of days of last week would show that. It might be a total change in trend. We've seen the low. It might be a counter trend rally, further lows to come. So I've actually ended up, after selling a bit, now buying a bit, and I'm back long on the S&P. And it might all sound contradictory, but trading and investing often are. You change your mind. And I'm glad to have reached where I've reached, because it's been the result of thought, analysis, conscious decision making, rather than laziness, boredom, following others, or emotion, whatever it is. Bored trading is like dangerous. So I feel I've owned the process a bit better than I have been. My risk management's better. Also, my bets have been smaller until I recognise that I'm hot again. And I will be. Dominic Frisby you're talking about here. But Druckenmiller applied the same logic to those who work for him, by the way. He placed big bets on those he could see were on a winning streak, and often even bet against those who were on losing streaks. And you should apply the same logic to me and whichever other writers you follow. Know when we're good, and know when we're not. And yeah, like I say, I'm not hot at the moment. I need to sort that out. But whatever pudding was in the fridge of my brain has at least been stirred a bit and stuck in a saucepan. So hopefully it'll warm up a bit. Hopefully someone will switch on the cooker. Anyway, thank you very much for watching. Please subscribe to the channel. Please check out my Substack letter. I'll put links somewhere on the thing here. It's very good, very pleased with it, very proud of it. And I'll be back with another video very soon. Cheerio.